Well, I'm going to change gears for a moment here because there's something coming January 1st, 2014 that we need to be aware of, which is a tax law change that just came into place this year regarding repairs and supplies. Repairs, when I talk about it, is for your business or rental properties, and supplies in your business. So here's how it works. Beginning January 1st, 2014, if you have supplies and every single item is under $200 and you're going to use it up in 12 months, you get to write it off, no problem whatsoever. But if you have a single item on your supply bill that's $200 or more, you cannot deduct that as a supply expense. The government says you've got to set it up as a new asset that you bought and take it over the life of that asset, which is from 5 to 39 years. For supplies, it would be 5 years. It is insane. All I can tell you, I agree it's insane. Can you imagine how many $200 items we would be clogging up that list? Now, the good news is, remember, we've still got that Section 179 write-off of stuff early, and even with $25,000 beginning in 2014, we probably get to write it off anyway. But it's insane what they're talking about here. Think of large companies, how this will impact them, including the small companies. It's crazy. So again, if you're going to use it up in 12 months, we probably don't need to worry about it, but this is the rule. Next thing, it's a simplified method for small businesses. That's everybody under $10 million in total assets, which is my whole client base, and hopefully everyone listening. If you have rental properties or your business, and you have repairs and maintenance, if any single item is $500 or less, and you're going to replace that within 10 years, whatever that item is, write it off. It's repairs and maintenance. You cannot break up a large repair and improvement project so that every single thing is $500 or less. If you've got a large repair or improvement project, that's what it is. It's one project. It's one amount. We can't take little things out of it. If you have items that are $500 or more when you're doing repairs and you're not going to replace that in a 10-year period, we have to set it up and write it over 5 to 39 years, depending on what it is. Yep, I agree. This is insane. These are final. This isn't like proposed. This isn't like they're thinking about them. This is it. This is their final say on it. It's been 2 years in the coming. This is their final say. So the saving grace is we hope if you're spending that kind of money, you're going to do something to repair it again in 10 years. So we just still write it off. But it depends on what it is. Improvements. It's the same thing. So improvements, the definition is, if these are costs to improve a piece of property and it's going to improve the life of it, it's going to better the life of it, or it's going to restore it to what it was, we have to write it off over time. We cannot just write it off at one time. Okay? So if it makes it the same as brand new, or it makes it better than it ever was from the beginning, we have to take it over time. If it's simply a repair, it's a repair, but we got that $500 item. Okay, our next one. So that was 2014 coming. Again, I think our saving grace is Section 179, where we can write up to $500,000 off this year, but really we're moving into 14 where we still have $25,000. I think that's going to capture a lot of that. Again, with repairs, we typically repair a thing over and over within a 10-year period of time. I think that's the saving grace. But it will be looking at all your repairs. We can't just stick them in a repairs expense account anymore. We just can't.